Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Joining us right now, Thierry Wizman, Director, Global Currencies Interest Rate Strategy at Macquarie. Thierry, I feel like we were at Bear Stearns years ago. I got to get right to the dollar, and once again, consensus is hammered. What happens in the foreign exchange market when everybody gets it wrong?
Well, it depends how they're positioned, I suppose.
But a lot of people were betting weak dollar, right?
Absolutely, as have we been betting in the medium and long term. Absolutely.
Wait, you're going to stop the show. We have the Harvard football coach on yesterday. I know. Tonight, Friday Night Football, yep. Harvard,
yep.
Cornell,
Big Red,
Bloomberg 92.9 FM Boston. Wizman here is he has to wear the Yale hat.
I know.
Just straight, I guess an offspring's at Yale or something. Good morning, offspring of Thierry Wizman, killing it at Yale in biology. Continue on the bet that was made in weak dollar.
The bet that was made the bet that was made in the strong dollar throughout most of this year was a bet made on the premise that policy uncertainty would continue in the U.S., that you would see reserve managers rotate out of the dollar, that this would be followed by private asset allocators, including fixed income allocators, move out of the dollar. It was also predicated on the richness of the dollar. We've seen a real appreciation of the dollar for the past 13 years. And that was a great story. And I think people made a lot of money betting on that weakness in the dollar until the last few weeks. What's happened in the last few weeks, I think, is not unusual. I think what has happened is that traders have realized, that, hey, there's just as much political uncertainty and policy uncertainty in the rest of the world in some of these key markets as there is in the U.S. And the case in point, of course, has been Europe with the prospect that we may see a socialist become the prime minister of France, that we may see delay to pension reform, that we will see France not solve its deficit and debt issue, and of course now Japan as well, with concerns over whether or not this ruling coalition will maintain power and whether we go to early elections there, potentially parliamentary elections. So. Look, as long as the U.S. looked to be the only source of uncertainty, it was a weak dollar story. Now that the U.S. is not the only source of uncertainty, it becomes a strong dollar story again.
Does the U.S. dollar retrace that 8-9% decline it's had earlier this year?
I don't think so, although it's hard to predict the headlines coming out of the rest of the world, in part because the nature of uncertainty is that it becomes hard to predict. But I will tell you that the dollar had gotten so rich over the last 13 years and had gotten to a point 9 months ago where it was probably a level on sustainability in its valuation. I just don't see it getting back to the levels of February and March of this year.
Explain to those across America listening and watching why we should care about Japanese yen. I saw a couple really good essays on this yesterday, but I think it needs to be repeated.
Yeah, so look, if you're a stock market investor, and let's take it from the perspective of not a policymaker, but an investor, because I want to appeal to the readership here. If you are invested in Japanese stocks, and a lot of these stocks are multinational stocks, they sell very high value-added industrial products to the rest of the world. Their operating margins benefit from a weak yen. So that's one reason why you need to pay attention to this. In fact, with the weakness of the yen that we've seen in the last few days, since the political turmoil, the stock market's done fantastically, which seems to suggest to me that the weakness in the yen is not so much a fundamental thing as much as it is a predilection on the part of investors to wonder, what is the central bank going to do? It's not about a weakening of the Japanese economy.
I was tackled by a Morgan Stanley guy yesterday, and we were talking about this. Dan Scully, he was a big Dan Scully fan. I thought Dan was on last time was great. And the guy said to me, he said, this yen is hugely destabilizing. And the heart of the matter, their wages have disappeared.
Yeah.
They're like England in 1930 in terms of real wages.
Yep. Terry, we got a government shutdown here in the United States. Is that going to affect our Federal Reserve here over the next several meetings, do you think?
Yeah, I don't think so. I mean, if what you're referring to is the premise that because of a lack of official data, the Federal Reserve will not know what to do, I would take issue with that. There's plenty of third-party data. The Federal Reserve itself conducts surveys. It collects data. it will have that at hand when the meeting takes place on October 28th and 29th to make an informed decision about where the economy is going. It doesn't rely just on official data. To say that you're data dependent does not mean that you're officially data dependent. It means that you're just data dependent. So I think they'll have enough data. Look, my view on the Fed is that there is a sufficient reason to believe that interest rate policy in the U.S. right now is not overly restrictive. If it were, we wouldn't be seeing the stock market at new highs. We wouldn't be seeing gold ripping. We wouldn't be seeing corporate bond spreads as narrow as they've gotten. I think the Fed needs to take all of that into consideration. If they do cut, it will be a very reluctant cut, I think, in view of what the financial markets have been doing.
So, I mean, is the cadence here of the Fed, is it meeting by meeting? Do you think they have a strategy of let's cut a couple times this year, then cut early next year, then we'll sit back?
If that, I mean, Jay Powell said on September 17th, I mean, practically admitted that the cut they made in September was an insurance cut. Okay. That seems to suggest that they're not necessarily on a path to cut 2 or 3 more times and wait. It really does suggest that the cut was only intended to strike a balance between the two mandates within the dual mandates a little bit better, and it does not imply a long and profound series of rate cuts.
We are fortunate at Bloomberg Surveillance to have Thierry Wizman with us this morning from Macquarie with all of his experience. These headlines out, this is CNBC driving the story forward. The president's Fed chair candidates list, it's narrowed down to 5 by the Secretary of Treasury. The list here is, it sounds like these guys are good. They play Crosby, Stills, and Nash great. Bowman, Waller, Hassett, Warsh, Ryder of BlackRock in the final 5. And I would suggest none of those are a surprise within the Fed Derby zeitgeist. I defer to Mike McKee on that. Thierry Wizman, is this the way to pick a chairman? By headlines and interviews?
No, you don't need these trial balloons, I don't think.
Exactly.
Right. I think that becomes disconcerting to the market, especially when there's so many choices that they are looking at. Look, personally, I think that Chris Waller would be a great choice, not because he's ideologically aligned with the administration. In fact, he's not, which is one reason why I think it would be a good choice. He is dovish, and I think that aligns him temporarily or short-term with the administration. But Chris Waller has had a long history of publications in which he espoused and exhorted the autonomy of the Federal Reserve. So he provides a very good balance, I think. Willing to be dovish right now because he has his eye on the job market and the prospect that employment gains are diminishing, but at the same time, not willing to be structurally dovish. I think that's what's needed right now in a Fed chairman.
Love it. I was taking notes. Thierry, I'm going to be speaking with Governor Waller at the Council on Foreign Relations October 16th. Can you be in the front row so I can have you ask a smarter question?
I'd love to join you, Tom. Just give me a call.
With Macquarie, we'll have to see on that. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Joining us now, Katy Kaminski, Chief Research Strategist, AlphaSimplex, for an ample discussion here. The mathematics is just prodigious, all of it based on the trend of the moment. The late Martin Zweig, over to Fed policy and economics, would say the trend is your friend. In the stock market right now, with the, I would say, weekend panic, AI, we're all going to die, CapEx, we're all going to die in that. Define the equity trend right now, Katy.
The equity trend is very strong. Signals have continued to strengthen, especially since the summer. And there's really and what's challenging as a trend follower, you need to see that resistance to pull back. And all systems seem to be go right now.
Paul allowed me to go nerd twice in this interview. I'm going to do that right now and then shut up and let Paul drive it. Okay, so you have a setup, folks, and I'm going to take SPX, take what NDX, whatever you want, and I'm going to take out a 2 standard deviation trading envelope, and then I'm going to run it logarithmic on the y-axis to show percentage change, not an arithmetic excess. And then I have exponential moving averages, and I look at the curve of them, the first derivative and even second derivative. And when you hear me say log convexity, that's what we're talking about. The equity market has not given up a bull market log convexity, has it?
No, not at all. And I think depending on if you use exponential moving averages, I mean, that is going to get rid of some of that vol that you're seeing in the first part of the year. So you're seeing signals strengthening and you're losing some of the concern.
Pro tip, Paul, I do this on a weekly chart as a rule of thumb. Everybody goes daily, and I go to a weekly unit.
No question about that. Lisa's nodding her head. She knows. She goes log on a weekly basis. Gold up 51%. Spot silver up 73% year to date. Commodities, that's a trend. Are you guys on that?
Exactly. I mean, that is the other really interesting big trend. And we're getting a lot of questions from investors about it because from both a fundamental perspective, buying gold, it seems to be or any precious metal seems to be that go-to safe haven trade. When the dollar's been weaker, you're looking at the yen now weakening. So it's buy gold and buy the stock market. I mean, that's kind of an interesting combo.
But how about the dollar? The dollar, folks, it traded off about 8-9% from that early 2025 levels. Now it's kind of stabilized, it seems like. So is the sell-off over? Is that selling trend kind of over for the dollar?
That is an interesting question. We have seen some idiosyncratic movements in the dollar. So you're seeing certain currencies like the Swedish krona, the Turkish lira, kind of gaining some ground on the dollar. My view on this is it's a trend that is sort of petering out. So it's losing some of its strength. And part of this is there's been so much backing for that weaker dollar, so much hedging demand against the dollar that has built up. We also have rate cuts on the horizon, which is also very negative for the dollar. Yeah. So I'm not saying that I'm positive on the dollar yet because of that, but it is a trend that, as Tom would say, losing some of its convexity.
Losing steam, I would put it, but convexity.
The Yankees lost convexity.
That's right, exactly. So what are the trades you guys are looking at these days?
So the biggest trades that you're seeing in the market is clearly equities and precious metals. But interestingly enough, you haven't seen a lot of movement in fixed income. It's been long to short. And it feels like that's an area we're going to have some change in the next few months. But the signals are really weak.
You guys short in the market?
Right now, we're not short in the U.S. We're seeing short positions in Europe. So you're seeing things like JGBs also and the U.K., but the U.S. has remained long.
To be clear on your short JGB, your short price.
Yes.
Price down, yield up.
Correct.
Worser, as they say. Katy Kaminski with us for a good chat. This is for Global Wall Street. We welcome all of you across America, around the world on YouTube. Subscribe to Bloomberg Podcast. Paul?
So, government shutdown. Do people like you, do you care about that?
I mean, I obviously care about it because I got to fly home today.
Right,
you know what I mean? But
exactly.
But what's really interesting is the markets are seeing through.
They are. It is.
And they're focused on growth and they're focused on let's not miss out on this AI bubble or potential rally, whichever you want to call it. So it's not moving on that.
Okay, what we're going to do now, folks, it's my second dose of Friday Nerd Show. We welcome all of you. What a privilege years ago to interview at length Ed Thorp, who invented so much of this. He basically, folks, took Las Vegas into the classroom, which was at the time scandalous, and brought Las Vegas, how do I not lose money, over to the stock market, how do I not lose money? Katy Kaminski, my religion is anti-martingale theory. Folks, the stock, you buy it at 100, it goes to 90, I think I'll double up. That's what most people do. Ed Thorpe's saying buy it at 100 and only add to the portfolio if it goes up. Anti-martingale policy out of COVID and forward. How has it been working?
So it's had its moments. I think what's really exciting about that is Ed Thorpe talked a lot about Kelly betting. And this is the idea that your conviction is a function of the strength of the trend of your position. And it works very well in poker and in other areas as well. And for people who are not familiar with Kelly betting, it's about this idea that you measure the strength of the probability of your bet And when your bet strength is stronger, then you take more risk. And that's sort of what trend following is really trying to do, is trying to adjust positions as a function of the conviction of the markets and how they move. And it works very well in a world where the headline risks don't run the show. So the fact that government shutdown is not causing noise, you're seeing those trends being quite profitable for trend following in the last 2 to 3 months, because that consistent approach of measuring and adjusting is working pretty well.
One of those trends / potentially bubble risk for a lot of people is just this whole AI narrative in the market. And it got maybe to a fever pitch over the last week to 2 weeks when we saw investments by these big tech companies like NVIDIA into these private companies, platforms like OpenAI, and then they would then commit to buy chips, and this circular trade. People said, boy, this doesn't feel right, or it feels a little fishy, but boats are rising on this trade. How do you guys think about that?
So the way we think about bubbles as a trend follower is it's really about measuring, and it's very hard to pick tops and bottoms of any sort of trend. And so what you want to think about is a trend can actually go much longer than you would expect. And that's this idea that Tom was talking about the Kelly betting. So you continue to trade into it, and sometimes it could take months. I mean, just because we are worried, it doesn't mean that the market will react. And so we wait till the market reacts to confirm that, hey, this is actually, something that's going against us.
What's the biggest, let me make this personal. What's the biggest mistake Lisa Mateo's kids make sitting on the couch trading through Robinhood? I want you to speak to our audience, and particularly our audience with kids that are learning. They don't have your mathiness. They don't know who Andrew Lowe is. Okay, what's the biggest mistake the trading crew's making today?
I think, and this is a personal view, emotions and moving on your emotions, that's why we have a diligent process, is where you make the biggest mistakes. And actually some of the research that Andrew Lowe did looking at investor behavior, they find that it's precisely those panic sells, those sort of emotions where you kind of say, things go down and panic, that actually cost you the most. So I think this idea that your emotions connected to what you decide is actually the dangerous part about day trading.
A lot of the math, a lot of the research shows returns are generated over a longer period of time and a relatively few discrete time periods. So it goes to Tom's point, you need to be in the market. If you try to time the market, I don't know. That just seems like a way tough game. It's just, you kind of have to just be in the market, otherwise you're just going to miss it, I think.
Yeah, I mean, who knows? I mean, look at the equity markets now. It could be months.
Jim Cramer and I have talked about this. Jim's been very good about it in speeches, and that there's a huge baseball analog here. And that if you line up, to keep it conversational, 10 trades, all of your alpha comes out of 2 or 3 winners. Let's expand that out to a lifetime of trading. You got a retirement plan, folks. You're wicked conservative, and you're playing a speculative portfolio. If you do 100 events, how many of those really create alpha? I'm going to say 18 out of 100.
So it depends. For trend following, it's much more of like a 50-50 ratio where your hits and the hit rate and the win is higher on that 50-50. So that actually shows you that trading in the markets, it's very difficult and the edge is small. And so it's the diligence that actually matters, as opposed to kind of picking that specific winner.
You can't pick the winner. You can pick a set of winners. But I think the industry is weaned that everything can be a winner. You can win 60%, Paul, 60%, 70%. There's no evidence of that. Mm-hmm. Within Vanderbilt is led on this. That's why Damien's nuts like he is.
He is. Yep.
They did great research at Vanderbilt, but I mean, you just don't have that. It's not. Munger's brilliant on this. The late Charles Munger.
Yep.
Absolutely brilliant on this.
Katie, how do you guys decide to sell a winner?
Great question.
The way that we think about winners,
he's like philosophical today.
So the way to think about winners is when winners are becoming losers. You know what I mean? So we're always thinking about the sizing. So for example, if you see a pullback, so if you see something like what happened in gold, it creates some noise on your signal. So that's an indication that you're kind of hitting some of the top and that you're kind of seeing that resistance.
Because if something pulls back 10%, do you sell half your position? If it pulls back another 10%, you sell it all?
It depends on the time horizon. I mean, I think where it gets tricky is in these big, huge sell-off moments where it's very hard to ascertain, is this an environment where the trend is actually changed or is there noise? And so we tend to use multiple different horizons and measurements to kind of aggregate to have a view that's maybe more of a voting mechanism.
So as a traditional rule, I mean, everybody used to have 300 stock portfolios, and then they became 100, and then Merceno and the crew over at Fidelity invented Fidelity 50. Sequoia had a lot to do with that. What's the optimal stock portfolio for mere mortals listening here?
So I'd say, for stocks, they're pretty highly correlated. So you want a relatively diverse portfolio. We tend to trade multi-asset. So that actually gives you a lot more diversification because you can add gold to your equity positions.
Did you add gold to your positions?
Yes, we've been in gold. Yeah, it's been the right call. And it's been like that for about a year and a half now. So gold is an example of a perfect trend. I can't tell you why, but it's doing it.
One more question here to Paul's great question on AI. What do you do with a Mag 7 here into earnings season?
Well, this is tricky because if you look at the Mag 7, it's such a large proportion, and that's what makes me and most people nervous is you have such a concentrated exposure to them. But most reports are showing that earnings are still looking good. So like I said before, well, the train's still going. Yep. It could go for a while before we have any sort of disruption.
To all of you in the stock market, as you prepare to read your barons here Saturday morning, Katy Kaminski said something that is religion. Position sizing. Go out to Perplexity, go out to whatever AI you have, type in the phrase position sizing, and just read everything you can about it. It is the heart and soul of the game. Katy Kaminski, that was just absolutely fabulous. Thank you so much. Really appreciate that. Chief Research Strategist at AlphaSimplex. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
There's been so many AI-driven stories out there.
Yeah, I saw a map, and it's like 3 or 4 states, like Virginia.
Right.
I'm learning as I go. Who do I learn from? I learned from Jurrien Timmer. It's been way, way too long since he's been on. Pro tip this weekend, your head is spinning. Go out to LinkedIn and subscribe to Jurrien Timmer, Timmer. He's Director Global Macro at Fidelity. He is beyond generous in sending you at Fidelity charts as well. What do you got, Paul?
And also, Jurrien will be on the latest edition of Masters in Business with one Barry Ritholtz. Podcast drops, Tom, this afternoon and airs on Bloomberg Radio at 7 p.m. Wall Street time and all weekend long. I don't know how Masters in Business, you got to be a player to get on Masters in Business. You do.
Well, Jurrien Timmer's a player. Let's dovetail the two together. Ritholtz, Jurrien Timmer, has a phenomenal type 2 construct, how not to invest. When you look at all your abilities at Fidelity's, what should you not do now?
Well, good morning. As your very great previous guest mentioned, having a system is very important. And, the market goes up 10, 11% per year. It rises 60, 70% of the time. But it's volatile, and 30 to 40% of the time the market drops, and nobody likes that unless you're a short seller. And so having a plan for those times is really what separates the investors who compound from the ones who don't. So I like to think of it as the price of admission for that juicy return is to not lose your stuff when the market doesn't go the way you want it. And so I think that's really the most important thing in investing.
For all of you worldwide, this is the way we roll. The Charles River. We go from the North Shore to the South Shore for 92.9 FM in Boston. Katy Kaminski out of MIT over Devonshire Street in buildings in the Back Bay with Jurrien Timmer.
Exactly. Jurrien, you sit back there at Fidelity as Director of Global Macro. From a global perspective, what looks attractive to you these days?
What really gets me excited these days is how the rest of the world. So we know, the U.S. has been exceptional. The Mag 7 have dominated really for the last, decade. It was the FANGs before the Mag 7, and so we know about this, supremacy premium that U.S. assets have always enjoyed, and they still obviously continue to enjoy. And we've got the AI story overlaying that, and for many, many years, value-oriented investors would say, well, look at EFA or EM or just, MSCI ex-US index. It's trading at, a PE that is so much lower than the US. Why don't we do the whole mean reversion trade and go there and sell the expensive US? And, that doesn't really work until you have an actual catalyst that drives value into the shareholder's pocket. And so for many years, we did not have that. But in the last year or two, or really last year or so, that's finally happening. So especially for the MSCI EFA, which is the non-US developed markets index, they have companies there, so mostly Europe and Japan, have really started to unlock shareholder value. Even like regional banks in Japan are now buying back shares. And that might sound trivial, but when you look at a discounted cash flow model, you obviously look at long-term earnings projections, but almost as importantly, you look at the share of those earnings that get returned back to shareholders in the form of dividends and buybacks. And so the growth rate of the PO, of the payout, and the payout ratio, so the percentage of earnings that are returned, is very important. And for EFA, over the last 5 years, the PO has actually grown faster than in the US. And the payout ratio, which always used to be lower in the rest of the world, is now at 75% for EFA, and it's at 75% for the US. Only the composition is different. For non-US markets, it's 2/3 dividends, 1/3 buyback, and in the US, it's the opposite. Mm-hmm. But you have now very competitive fundamentals, and non-US stocks are trading at 15, 16. The US is trading at 25. So finally, for the first time in a very long time, we're now in a global bull market where the pond has gotten bigger, which is good, right? Because we all have to deal with concentration risk of the Mag 7. Yep. But there are other places to go, which is good for an investor.
Jurrien, earnings start in earnest next week with the banks here. I know your teams at Fidelity, all the analysts, the army you've got there will be pouring over the earnings releases. What are you looking for this earnings season?
Well, what we had in the last couple of quarters was earnings beats that were well north of what we typically see. So we all know this is the oldest game in the world, right? Companies guide lower and then they underpromise and overdeliver. And then during earnings season, they beat by 300-400 basis points. And that's fairly typical. Earlier this year, of course, we had the tariff tantrum. Earnings revisions were being cut down, and then they were sort of brought back up again when the worst case tariff situation did not develop, and then we had the one big beautiful bill. And so right now the earnings growth rate, the expected growth rate for Q3 is at 7%. And if recent history is any guide, we'll go well into the double digits, and that will then be 3 quarters in a row of double-digit earnings growth. And what more do you want, right? In a market that is expensive and now about to enter its fourth year of the cyclical bull market.
I got 90 seconds, and this single sentence in your report is too important. You cannot see a bubble coming. You can only discuss a bubble after the fact. Give me one attribute that gets you out front of a quote-unquote bubble.
They always last longer than people think. I've done the analogs all the way back to the tulip mania, and they are, by definition, they are chaotic patterns. They're parabolas, and those are not rational linear patterns. So this is why bubbles suck everybody in, because otherwise they would not be a bubble.
Right. I can't say enough about that, folks. Jurrien Timmer on the x-axis. Everything takes longer, and if you're betting against it big time, in, out, as Mr. Maynard Keynes said, guess what, Paul? you run out of money. Jurrien Timmer, thank you so much, at Fidelity, Director Global Macro. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Now back to regular newspapers. I'm afraid to ask. What do you got?
Okay, we touched upon this yesterday with PepsiCo earnings, but the Wall Street Journal has this deeper look into the makeover of Lay's potato chips, okay? Because health conscious consumers, you did look, okay. Let's start with the bag, okay? For those of you
this is some history.
This is it, okay. If you're watching on YouTube, this is what the bag looked like before. So they're going to be changing it. You have this shiny yellow bag, right, with the little potato on the bottom. Okay, so what it's going to be, it's going to have a phrase that says, made with real potatoes. No more shiny, as opposed to the ingredients on the bag. I'm not sure. But the shiny bags are going to have this matte finish. It's going to have pictures of potatoes and chips, a more kind of natural look to it, okay? And it's going to have wordings that say no artificial colors, no artificial dyes, flavors. It's going to have that on the front. And on the back, it's going to have the original chip recipe from Herman Lay's himself.
Nice.
So a lot of ingredient changes. It's all because of what's going on, today.
It's through the whole food industry, right?
It's through the whole food industry. We always hear about different companies kind of taking out these dyes.
Can I ask a dumb question?
Please.
Is French's mustard really yellow? Is Heinz ketchup really red?
I'm sure it's not as red as that. But that's the problem, is that these colors, like the barbecue potato chips, they're this red color, but it's because of, the artificial coloring.
Can I ask a dumb question? We got to get to the next story. Sure. Who cares what the color is if the bag of chips has a pound of salt in it?
Right, exactly. That's what we're talking about.
Are we missing what we're really talking about? How many bags did you have this morning?
I had a bag this morning. I had a bag like that. And I'm just fine.
40 milligrams of sodium.
Can I I'm sure that Mr. Bloomberg's listening. His P&L has gotten shaken. Every day when I walk out of here, I sneak out a bag of Cheez-Its.
Sure. Yeah, who doesn't?
Just because.
It hurts the Bloomberg LP P&L. What do you got next?
Okay, what else we have in the Bloomberg pantry? That would be matcha. Yes, okay. So I have my matcha here.
That's going to
It's a look into matcha mania. But this is serious. This is Financial Times. They're saying, can Japan sustain the demand? Because the demand has gotten so great, not just for matcha lattes, but for things like matcha flavored Kit Kats, matcha flavored cookies, matcha flavored, ice cream, all this. I mean, it's a staple at Starbucks. A leaf?
Is a matcha a leaf?
Yes, it's from the green tea leaves. It's a powder made from it.
Okay. So it's green tea leaves.
Green tea leaves, yes. It's crushed into a powder, and the powder is what you use in the matcha.
But you have to put something in the matcha to make it even drinkable.
I actually put milk and I put a little syrup in here. Sugar-free.
That's the point. All right.
But it's becoming this big thing. I mean, Japan's exports of powdered green teas were up 75% in 2024. Right. So it goes to show you how much this is on the rise. So it can become a problem.
Kill him. Never. Squeeze in one more and make it something I'm pleased with.
Yes. Okay. This one also. Well, there was a lot of talk, right, over whether trimming down the New York City mayoral race would trim Zohar Mandami's lead. And there's a new Quinnipiac poll that shows it's starting to happen. Mandami's lead over former Governor Andrew Cuomo, it's narrowed after Mayor Eric Adams exited. So here's what they show in their latest poll. He leads a race, 46% backed him, followed by Cuomo with 33%, Curtis Sliwa 15%. Now, when you look before, when it was a four-way race, it showed that Mandami had 45% to support, 23% for Cuomo, 15% for Sliwa. So it's looking like, nearly all of Adams' supporters are turning to Cuomo at this point.
To the mayoral staffs listening on Bloomberg 1130, we are honored to have your candidates come in and talk to us. We had Mr. Sliwa in this week, and to get all the rest of them, frankly, numerous times before the first Tuesday.
Yeah, Mr. Cuomo. So we had not, I guess we had Mr. Mamdani once, I believe. So,
very good. Mm-hmm. The newspapers with Lisa Mateo.
This is the Bloomberg Surveillance Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.